Welcome to FX Street. We're going to take a look at something nobody probably really wants to talk about right now, but it's something that we should always keep in the back of our mind. But just thinking of like what if scenarios, what like would happen if Bitcoin were to capitulate, or how low could it go? And we're talking about that in the midst of a nice bullish expansion phase beginning across cryptos. At least that's what it looks like. But before we get into that, head on over to YouTube, go to our channel, hit that subscribe button. You can follow me on Twitter at JustAnalysis1, and then follow us also at FXS. I thought I had that pulled up, FXS Crypto on Twitter as well. So looking at Bitcoin and, looking at it from a daily chart perspective, it looks very strong, even though it's in the cloud. I mean, the cloud itself is a very it's a very indecisive zone. It's very very volatile. It's really the definition of pain, and it's a place I say that trading accounts go to die. But from an Ichimoku perspective on the daily chart, there's clear signs that we could be moving higher. But when you look at the overall structure, it's very much a bear flag that's forming, and the top of that bear flag is right above where on the weekly chart, where you probably don't want it to be at, and that is the top of the Ichimoku cloud. So that is a very natural resistance zone within the Ichimoku system. But then you also have that flag pattern, and if that happens to be just a swing high within a bear flag, and prices collapse lower, what are some levels that we should look out for as far as, where could it go down safely and still remain bullish, but where could it go down and that's no longer bullish? It's going to likely enter into a big old dump. The first zone that we'll want to pay attention to, and I'm going to reference the weekly chart on this, is because the Ichimoku cloud itself is where primarily the last structure of support exists. There were some concerns back in late January, so the week of January 21st this year. Bitcoin did drop down below the cloud, but the Chiku span was still above the candlestick. So there were still clear signs that Bitcoin is very much at risk of triggering an ideal bearish Ichimoku breakout. The thing with how it is now, with the Chiku span below the candlesticks, and you can see that Bitcoin is really struggling to move higher. The Chiku span is really struggling to stay above that level, rather below that level. And that may be playing a big role in why Bitcoin is facing a little bit of apprehension for moving higher during the week here. But level to watch out for Bitcoin on any move south is a weekly close that is like at 37,000 or lower. In that event, Bitcoin would then confirm an ideal bearish Ichimoku breakout on its weekly chart, something that it has not had confirmed since the COVID crash. And even then, I don't even know if the COVID crash would be considered a real Ichimoku. This was kind of more of like an anomalous event than anything else. But the last time there was an ideal bearish Ichimoku breakout, besides the COVID crash, that was back in June of 2018. That was the last time that occurred. So, and again, without going into all the details, all the conditions of what triggers that most sought after of short entries in the Ichimoku system, in a nutshell, it's when the current close is below the cloud, and then the Chiku span is below the bodies of the candlesticks and in an open space. Open space meaning that it won't intercept the bodies of any candlesticks over the next 5 to 10 periods. So while it looks bullish on the daily chart and looks very much like it's set up to be expanding higher and higher, which I believe it's going to do, the structure on the weekly chart, we still don't have anything on here that really confirms and says, hey, yeah, Bitcoin is bullish and it's ready to go. Because right now it still says it's iffy. So let's just say it does dip. All right, let's just say it does fall down lower, and it just kind of continues to fall south. Bitcoin right now is currently, we're at price tool here. We go from the all-time high to where we currently are at. We're down, almost 40% from the all-time high. The last swing low that we had back in the week of January 28th was at 52.2% lower. But Bitcoin's had some steeper drops, and this may be hard to believe. Sometimes we forget, but the week of April 16th last year, consequently, the high of Bitcoin last spring and summer was my brother's wedding. So it's a curse. But the drop last year in April through June was actually greater than the drop that we had from November into January. Not by much, but it was greater. But Bitcoin has had some pretty extensive drops over its history. You look at the bear market that lasted from late 2017 into early 2019. Bitcoin dropped lost 83.8% of its value. If you even want to measure from the June 28th, 2019 high to the COVID low, there was a 70% collapse. If you want to go back even farther into you know what? We got to go back even further into 2011 and such. But you look at the Mt. Gox, if anybody was around for that, in 2013, Mt. Gox lows was 92.6%. Before that, in Bitcoin's early life span, when it was trading at $1, back to 2011, 93.7% drop, 92.6% drop, 83.8% drop, 70.9% drop. When you look at these extremes, you probably notice a pattern. And one of the patterns is, retracements of greater than 60 or 70% for Bitcoin, totally normal. Retracements at 80 to 90%, rare, but still very normal. One thing that I think we should observe and pay attention to is that it seems like, and there's not enough data to really go off of this, but it just appears that the biggest drops from prior all-time highs to their swing lows before they recover, they seem to be getting less dramatic. They seem to be decreasing in scope, because if Bitcoin were to lose 93% of its value from its all-time high today, that would, 93%, that'd bring it back down to, oh man, wouldn't that be great? $4,450. Could that happen? Sure. Is it likely to happen? I mean, you have a lot more players in the space. You have Grayscale, you have ARK Investments, you have Tesla that with Bitcoin on the books. You have Ecuador. Is it Ecuador? No, not Ecuador. Can't think of it. You have, Bitcoin is becoming more and more adopted, and it's getting bought more and more frequently. It's getting used more frequently. So the dips may not be as extreme as they used to be. So let's just assume then, all right, well, like a 70% drop. How far does that bring us from these all-time highs? 70%. Again, there's talking about a lot of ifs here. That brings us back to the 20K zone. That's a zone that's been traded and tested and moved around before, and that to me seems very doable. Like that could definitely be an area to pay attention to. Consequently, it is very much within range of fib retracements, going from the all-time high to the low of the strong bar on the monthly chart. The 882 retracement at 20,500. 20,550, or we'll just say 20.5K. That is well within that range. 882% retracement is a very, very responsive one. You can see a lot of pretty massive moves come off of that. And then, just from using a fib expansion from this zone, from the all-time high down to our swing low to what is our temporary high here, going with our last important swing high. The logarithmic expansion the 100% level is at 22,000. So, I mean, the difference between, it's a 10% difference roughly between 20,500 and 22,000. You have a zone, and the 882 Fib retracement, that is where it could go down to. Be a 70% loss of value, well within a normal range for a deep drive down. But that's the kind of move that we would see. And then altcoins, what happens to them? They also collapse. They also get into the 80-90% losses. But what's different about this now is there's been, some cryptos like Dogecoin, they've spent almost a whole year now in a downtrend, and they've been in that downtrend, creating new lower lows the whole time and pushing further and further south. So, and Dogecoin isn't alone there. You have Cardano, unless something changes dramatically, it could. Well, actually, it is changing dramatically today. But Cardano was on track for a 7th consecutive monthly low, monthly closed in the red. There's just a lot of altcoins that were down, in that 70 to 90% range, which was normal for them in 2017 to 2019 as well. That it seems like it's not very likely that this would happen with Bitcoin. But just pay very close attention to what happens this week and into next week. And anytime that Bitcoin approaches that 45,000 level, that is going to be really the make or break point for bulls, rather bears, I should say. That's going to be the place where short sellers are going to have their conviction tested. And it's going to be the place where bulls are going to have to really, really, really reject and deny any further downside movement. Because if they fail to move above, the 45K level there, above the top of that bear flag and the top of the Ichimoku cloud on the weekly chart, it's likely just to trigger another big old drive south. So that's a little bit longer video than usual, but just something to pay attention to. I also do want to point out, there was one other thing, that looking at things from a weekly chart perspective and looking at cycles, one of the cycles that Bitcoin is very sensitive to, and Ethereum is as well, and I think you can see it very clearly on Ethereum's chart as well. But there's this astronomical cycle called the series declination cycle. And for whatever reason, Ethereum, Bitcoin, and the crypto market in general follows that the kind of ups and downs of that cycle very closely, and has for it's almost its entire existence. And when you look at Ethereum here, we'll go to that's on the weekly chart, and we get rid of the Ichimoku system. And there we go. If you look at the declination cycle below, and you look at Ethereum's price action, what do you see? You see a pretty good respect given to the overall flow of this market. And even though Ethereum's not that old, and when you analyze markets like stocks, 5 years or 6 years worth of data is okay, but it's really nothing major. And you got like GAN analysts. I'm a GAN analyst. We love seeing decades worth of data. So cryptos are still very young, but there's a lot of respect given to this declination cycle. And according to what this says, is that we should expect to see cryptos rally, perhaps hit new all-time highs, and that the bear market, the real bear market, won't find its top and where it starts to sell off until late June, early July of this year. And it will last a while. It will last just as long as the last one did, maybe a little bit shorter, but it'll go until the fall of 2024. So it could be a pretty extensive, painful down drive. But anyways, that does it for me on talking about Bitcoin and where the lows could be. In a nutshell, 20K. That is probably the downside limit, minus any kind of like weird aberration in different exchanges might show a wick that goes down to like $1 or something, but that's really, I think, where the bottom of that'll end up. So I will leave it there, and yeah, hope you all. I don't know who watched the 15-minute long video, but congratulations for making it through. And please don't forget to like, comment, and subscribe. Follow us on YouTube and on Twitter.